Moving on then, let's put the spotlight on individual stocks earnings. All eyes will be on Ultratech Cement's Q2 numbers later today. Nigel, what are the street expectations like? The stock is up 45% this year.
That's right, Manglam. Just take a look at what the stock did in Friday's trading session in the last 1 hour. If you pull up an intraday chart, you'll see that, in fact, the street is sensing a rather good set of numbers. But let's not speculate and let's focus on what exactly our poll threw up. Our standalone numbers, in fact, that's something that you should be looking at. So total income, we are expecting it to decline by close to around 2%. That's despite of the fact that the blended volumes, that's both the white cement as well as the grey cement, that we're expecting to rise up by close to around 3% at roughly around 11.5 million tons or thereabouts. Now, blended realizations, though, are expected to be lower and lower. What's happened in the past year? We've seen strong pricing in North as well as in Central India, where prices have been up by around 7 to around 10%. Well, that's going to be offset because in South India, in the East as well, we have seen pricing pressure. Even in the West, on a year-to-year basis, it's lower. So all the good work done in North as well as Central India, that's going to be offset, and that's why we're expecting the blended realizations to come in a tad bit lower. What could be a negative surprise? The street is not really working with this, but we've seen quite heavy rains in the last 3 months or so, so that could be a bit of a dampener, but that's really not a very big factor because the street is focusing on their operational performance. So the operating profit should come in higher by around 12%. That's indicating that margins could expand by around 200 to around 250 basis points. So just put all those numbers together. The EBITDA per ton should come in at around 920 to around 930 rupees per ton. So that's going to be a big improvement of around 11% on a year-to-year basis, though on a sequential basis, it'll be a tad bit lower. I think that chart as well should come up for you. Why is the EBITDA per ton going to improve? Because of strong pricing in North as well as in Central India. And also remember, pet coke prices, they've really rocketed in the last 3 months, and even from the lows that we saw this year, it's even doubled. But even if you compare it on the year-to-year basis, still pet coke prices are low. And remember, Ultratech Cement would have some low-cost pet coke inventory that they would have used in the last quarter. So that's what's going to help the EBITDA per ton improve. Besides that, they've been focusing on cost rationalization as well, so that's going to help the operating performance, and also the profitability should jump up by around 40%, better operating performance, lower interest outgo, as well as higher other income. That's what's going to help the profit to jump up. Even if the numbers are good, just to tell our retail investors, remember the stock is by no means cheap, though it's the largest cement company, and in fact, it's the market leader. Interesting set of numbers. Second half is normally when we get those numbers, so let's look out for them. Back to you.
Okay.